you obviously came from finance, Guy, also software. But why construction and construction tech?
The construction sector is a very cash-thirsty supply chain and sector. In the UK, US, and Australia, it represents the largest amount of bankruptcies out of any sector.
Mm-hmm.
And the number one reason for that is running a...
You mentioned earlier about the sales and onboarding and getting people selling to the CFO. What have you found has worked from you in terms of actually getting in front of these people in the first place? Like, how do you outreach? Like, maybe what's your go-to market? If you could speak to that.
If I was to answer it in a sentence, you've got to have... and that's been one of the big learning curves for me.
What's your, how do you identify good people?
Look, it depends. It depends where the company's at.
Hey everyone, and welcome to Groundbreakers, where we reveal the stories behind the most successful founders and operators in AEC technology. From exits in the multiple hundreds of millions through to the struggles of building in a resilient industry, we've got you covered. Before we get started though, if you're a startup founder or operator responsible for innovation in your company, or you want a deeper, more insightful look into technology in AEC, you won't want to miss our newsletter. From deep dives into particular technologies such as AI, robotics, design, software, and so on. Hot takes from investors betting big in AEC technology and advice on building tech companies, including the stories and takeaways of the most successful AEC technology founders. Head over to www.bricks-bytes.com and sign up today to get this exclusive material straight to your inbox. And now for the episode.
Okay, so good evening, Guy. You all the way from Sydney, Australia. So it's nice and bright and early for us, and you will just be winding down your day. So anyway, your background. You primarily come from finance, as far as I understand. I mean, now exploring the world of construction technology, and some of your roles include investing and a limited partner in a fund, and you're now the CEO and co-founder. Is that right? Co-founder?
Yep.
Of Earlytrade. So yeah, I guess there's my version of the introduction, but maybe you could do a little better than me.
Yeah, sure. Look, thanks for having me. So I studied financial markets and economics at university. I always wanted to run my own business. And so after university, I studied the language of business and worked as a chartered accountant at KPMG. And from there, the next thing I needed to work on was my sales. So I moved to London and worked in a tech sales role for almost 4 years. And I worked in a company where I was employee number 16 and was a part of it scaling to 170 employees and eventually being acquired. And so that was my first experience with scaling a business. But look, I've always had an interest in moving money around and playing with money and understanding the economics that drives the society we live in. I like working with people. And so I've always felt at home working in for-profit businesses.
This London-based sales job, was it about exploration of UK, Europe, or you were interested in the particular business, and why sales?
Look, it was more the former. I was 25 years old. I finished at KPMG and I'd done my chartered accounting postgraduate diploma, and I wanted to get into sales. And this was back in 2013. Tech wasn't as big as it was back there, if you can imagine. But I wanted to work in technology, and I wanted to work in a sales role, and I wanted to sell to businesses because that's been my background. And so, yeah, I traveled a lot of Europe, and it was a great time. I had my late 20s there. And I learned how to sell to enterprises and how to do B2B sales, how to manage people, and how to do it in a dynamic organization which didn't have a huge brand in the in market, and all that experience served me well with starting my own company, because you don't have any brand recognition. The problem's new, the solution's new. So convincing people, and I found a lot of people that have come from an organization, a very large one or one with a large brand, struggle in growing a startup on the business development side.
Interesting. So, something that comes up quite a bit on our podcast and when we speak to people is this background and whether you need a construction experience. So, you obviously came from finance, Guy, also software. But why construction and construction tech?
Yeah, so we actually stumbled across the construction sector as we were growing Earlytrade. I think, there's a temptation as a founder who's had some success to kind of talk about the narrative as it was all planned. This is exactly how it went. But it didn't happen that way with us. We had a thesis. I had a vision. We wanted to tackle the problem of late payments and cash flow, which we thought was a global problem across all sectors. And we came up with a technology that did that without lending. And we started Earlytrade in 2018 and started building it. And we were working with very large corporates, private and listed businesses. They weren't construction based. And then during COVID in 2021, in Australia, a number of states shut the construction sector down. And so we started working with smaller customers in the construction sector, so commercial builders who wanted to help their subcontractors through the shutdown period. And we were doing it originally just to support the industry. It was outside of our ideal customer profile. But when we launched the programs, the demand for the product was an order of magnitude more than outside of the sector. And so we kept signing more clients in the construction sector and eventually made the decision to specialize just in the sector. And at the time, I didn't realize why the construction sector had such a high demand for our product, which effectively unlocks cash flow. But as you think about it, the construction sector is a very cash-thirsty supply chain and sector. In the UK, US, and Australia, it represents the largest amount of bankruptcies out of any sector. Mm-hmm. And the number one reason for that is running out of cash flow and working capital. Mm. And look, there's a lot of reasons why the sector doesn't have a lot of cash flow, and we can get into that.
So there are some stats, I think, from your LinkedIn profile. You've had 130,000 businesses, and you can correct me. I don't think you lend, but you helped to generate this $2.5 billion of money being paid. So I'm just very curious, like, what's the tech behind the platform that facilitates late payment if it's not lending? Because you mentioned something like that. I'm just curious, like, how does it work actually?
Yeah, so we are an early payment solution that allows general contractors to scale out early payments to their subcontractors. So we're not a bank. We're not a money mover. We're not a credit card company. And we don't want to factor debt. We operate a platform that brings general contractors together with their subcontractors in order to offer discounts on invoices in a dynamic manner. Mm. And the way we do that is by running a dynamic discounting system that enables subcontractors to pick a discount that they're comfortable with on an approved invoice that they're waiting 60 to 75 days to be paid. And they can submit that discount to their general contractor to accept it.
So let's try and break this down. So me as a bit of a finance layman and a very kind of basic level of understanding of this, and and perhaps some of our listeners as well who are construction folks and may not have come across such a instance before. So as far as based on what you just said, Guy, you have a subcontractor who is in contract with a general contractor. So you have the general contractors building, I don't know, let's say a hospital, and then you have a subcontractor who is doing all the dry lining. And what happens is the dry liner may have an invoice that is, say, I don't know, just for ease of calculations, like £1,000, which the general contractor is due to pay. Am I on the right lines here so far?
Put 100,000.
Yep.
So what the subcontractor can do in order to get paid early is say, hey, Mr. General Contractor, we will give you £100 off of this invoice if we can get paid tomorrow. Is that the sort of logic?
Yeah, pretty much, except it happens over hundreds of thousands of subcontractors on millions of invoices every day. But effectively, that's all we're doing. We're managing this early payment negotiation. And what we're doing is we're allowing both counterparties, the head contractor and the subcontractor, to opt in at rates and at levels that they are comfortable with. And so it's like a financial market in a way. And when the discounts are accepted, the general contractor pays the subcontractor themselves the exact same way, just less the discount. And so
I see.
It's different in every region. But let's take the US, for example. The average payment term in the US is 60 to 75 days after the work's been completed, after the materials have been purchased. And so subcontractors typically have a few weeks of working capital, and those payment terms, the math just doesn't add up. And the subs are constantly robbing Peter to pay Paul. And so by giving them an early payment option, it allows them to plan their businesses better and generally become a stronger subcontractor because they can forecast when those payments are due and they can accelerate them when they want.
Hey listeners, I want to take a quick break to remind you about the Bricks and Bytes newsletter. If you're interested in learning about the technology shaping the future of construction, you won't want to miss the valuable insights we share each week. To get this exclusive content delivered straight to your inbox, head over to www.bricks-bytes.com and sign up today. Link is in the show notes. Back to the show.
Is it not the case that I just increase my invoice amount to, let's say, 10% more, and then I give you early payment option 10% below? So
It's a good question.
Yes, that's exactly it.
we get we get asked that a lot by our general contractors. It's very difficult to do that. It's not impossible, but the first part is the rate at which the discounts are accepted change every day based on supply and demand. So it's not a static rate. It's a dynamically moving rate based on how many people want early payment that day. So the rate always changes. That's point one. Point two is the general contractor is making these early payments less the discount. So they have visibility of what discounts are being offered. And then, so when you go to tender a new job, they'll know what discounts you've been offering. And so it's not as simple as just increasing, your tender price by 2% or 10% in your example. Those will be held, that will be caught in commercial negotiations on the procurement side.
Okay, so these discounts are not as big as 10%. That's my feeling based on what you said. That's like more like much smaller discounts.
The actual discount is between 2 to 3%. But the return on cash is north of 25%. So if you think about it, a 2% discount on a 30-day early payment, that's a 24% annual return. And that's one of the reasons why our general contractors use us. So our client is the general contractor, and then the user of the platform is the subcontractor. The way we make money is we share in the discount that the subcontractor offers. And there are other fees as well for certain other things. But in general, it's a rev share agreement. It's free for the subcontractor to access the platform, and they can choose whether they want to offer a discount or not. And they can pick what amount they offer. And so they're making the offer to the general contractor, and then all the subcontractors compete for the cash the general contractor puts up in the early payments.
Very interesting.
Yeah.
So, yeah.
I'm curious, Guy. We will dive more into the business model later, but I'm very curious how you got to this conclusion. Like, how you knew that this was like the problem worth pursuing?
Yes. And are there any marketplaces, like a financial marketplaces like that in other industries that you like took the model out of?
So there are a range of different solutions that focus on this problem. And that's what I started studying. So the seed was planted when I worked in London for a business where our customers always paid us late, which in turn led the business to not pay our bonuses because they didn't have the cash. And so I lost a couple of high performing people, and I canceled a European holiday, and that was just unacceptable. So I started trying to work with our accounts receivable team at that company to try and induce the customers to pay us earlier. So this isn't a novel idea. It's offering them a discount to settle early. And that worked fairly well, but there were a few issues. But that effectively was the idea behind Earlytrade. And then when that business exited, I started looking into the space a lot more. And I found the only way a business can really fund its working capital is by borrowing money in some form or another, whether it's invoice factoring, supply chain finance, credit cards. And so our hypothesis was, can we create a platform that allows the industry to fund itself? Because everyone's accounts payable is someone else's accounts receivable. And there's all these problems with lending money. Like, it's expensive because it's risky, because you're effectively lending money to someone you're not in business with. So our hypothesis was, let's come up with a platform that allows anyone to opt in and price what they would value cash flow for. And so that's kind of what we set out building. And my co-founder, who's been our CTO, is now our COO, Piers. He was working at the largest stock exchange in Australia, the ASX, in advanced data analytics. He had built a retail trading platform for one of the big banks in Australia as well. And so he effectively came in, translated my commercial vision into a new financial market. That's effectively what we've created. We are a market maker where we have two people who are making offers. I'm willing to pay early. This is the lowest I'd accept. And then people who are owed money are saying, I want that cash flow early. I'm willing to offer this. And we help them meet in the middle. And so to answer your question, Owen, I didn't know this was the right solution. I had strong conviction on it. And we set out building it, and we learned as we signed more and more clients. And I think if you can listen to the market and let the market tell you where to go, there's a lot of value in doing that as you're building the company. And that's what we did, because we started off offering this to all industries, and then we decided to focus just on the construction sector. And now we're actually releasing more products that are outside of just early payments to that sector to better serve them.
Mm-hmm.
Very nice.
Can you compare Earlytrade to invoice factoring and how these models differ?
Yeah. So look,
and why is Earlytrade type of business model better than factoring, perhaps from customers' point of view?
It's a big misconception, and a lot of people initially think we are doing factoring, and it's very easy to tell you why we're not. So when there's a factoring arrangement, there's a third party advancing cash. There's a third party lending. and in our model, there's no third party. So it's just the customer paying the supplier early. No money flows through Earlytrade. And so when you do that, you remove a lot of friction with these transactions, because when you use reverse factoring or invoice financing, if you do it at scale, you can actually hide the operational cash flows of a business. And investors don't like that. In Earlytrade, it's a really simple transaction. There's an approved invoice. So the work's been done. The invoice has been approved. Company's waiting 60 days for payment. At that point in time, they can jump onto our platform. They can offer a discount and get paid early by their customer. It's as simple as that. There's a lot of complexity in the back end, but on the face of it, there is no lending because the customer already owes the supplier the money. So they're just paying them that money early. And so when you get into your accounting, it makes things a lot more attractive for someone to take an early payment than to borrow money. Because by borrowing money, you've now got a liability. You most likely have to secure that loan against property or some other form of asset. And there's a lot of paperwork involved and a credit approval process. With early payments, there's none of that. You're not borrowing money, so there's no risk to your business. There's no credit approval process because if you're owed the money, you can request it early. And there's no settlement risk or fraud risk or credit risk in the transaction. And so it actually removes all these frictions that come with invoice financing. Does that make sense?
What? Yeah, very well.
Just 2 secs for benefit of my simple brain and perhaps people listening too, was just to briefly explain what invoice factoring is.
Yeah, so invoice factoring is when a financier advances you money that's secured by an underlying asset, which is the invoice. So if you're owed $100 by company X, the invoice financier would come in, and there's so many different variations of how they do it, but typically they'll advance you $70 now, and they will charge you interest on the amount until they collect it. And so for their model, they maybe advance you 70 now and then another 20 later, and then they would keep the 10. But effectively, it's someone lending to you and collateralizing that loan on your future receivable.
My gut feeling is that factoring is way more expensive than service of Earlytrade.
It definitely is. It's more expensive than early payments because the lender is taking a risk and they need to be compensated for that risk. Whereas Earlytrade is not taking any risk. We are not taking balance sheet risk. But it's actually not the cost that often is the problem. It's the terms and what it can do to your business if you default. That can cause your business to default and go into bankruptcy. So it is a lot more riskier as well as just a cost benefit.
So assuming there are two parties agreeing on the platform that will discount this invoice, is there any way of enforcing it if someone is not doing what they said they will do, or if it happens at all, that there is some issue with enforcing of this agreement?
I think your question is, how do we enforce or incentivize bad behavior not to happen?
That's right.
And it's another good question. So we have rules of integrity that both counterparties sign up to. So the general contractor who's paying early agrees that if they accept the discount, they have to make payment on the date that is agreed. And there are rules if they don't do that, which dock them and penalize them. And then the subcontractor, equally, who's requesting early payment, needs to understand that it's a binding agreement that they're agreeing to accept less in return for early payment. And so, one of the key things that is growing our business is that our subcontractors trust our platform. And so one of the reasons why it's getting harder and harder to do this yourself is because they know that if they use Earlytrade, they're definitely going to get the cash on the date that is set. So trust is very important to us, and we have to manage the integrity of people. But most of our clients, 99% of them, get into this because they've got a strong balance sheet. They want to help their subcontractors and provide this option for them. And so they're committing to doing this always on. And so it's already a good sign of strength to the market to offer an early trade program, because you're effectively saying to the market, I've got strong balance sheet. I'm willing to make a portion of my cash available every month for early payments. And I'm going to do this over a period of years.
Man, shall we touch on a macro view of like working capital and then dive into the business model a bit?
Macro view of the...
I think that...
Right. So yeah, I think this question that we prepared earlier was based on not knowing that you are completely different than factoring, because the question implied that there are seasons in the business that the business is doing better than in other seasons, just because of the interest rates and the competition that in some investors might get paid better using some other investment vehicles rather than lending through businesses, just because the interest rate is higher or lower. Does it make sense what I said, or completely not?
Yeah, it's still relevant even though we don't lend. So interest rates affect the rates in our market. So look, we speak, and they also affect our business in general. So maybe I can comment on how interest rates affect our business as well as our clients' businesses.
Okay, perfect.
So we speak with CFOs at large general contractors across the world. The CFOs we speak to expect interest rates to decline over the next couple of years. And what that means is that puts pressure on the return on cash they have in their investments. And they make earnings, they make profit from interest that they get paid on money market funds. And so as interest rates start to decline, they need to maintain their margin, maintain their profit. And so they look to solutions like Earlytrade, who can help them maintain profit because they can earn money from paying their subs earlier, which helps to maintain their margin and ideally boost their margin.
Okay, so it has impact.
I think, what I wanted to touch on was just about the general view of working capital in construction, because based on my understanding, there's quite a few companies trying to tackle the issue, not in the exact same way that Earlytrade are, but the whole notion of the 60, 70 payment day cycles puts a lot of strain on the financial resource and capability perhaps of the subcontractors. And I even heard that in places like Latin America, these payment terms can be like 180 days, 6-month cycles. So I guess, Guy, maybe if you have some stats or like a thesis on generally working capital in construction.
Yeah, absolutely. This is what we do. So there's a working capital structural inefficiency in the construction sector. You have subcontractors who have to purchase materials 90 days in advance and then put those materials into the things they're building. They have to employ labor, which they typically pay on 7 or 14-day cycles. They have to complete their job, submit their invoice. That invoice needs to be approved, and then they wait. If you're in the US, 60 to 75 days. If you're in the UK, 45 days. If you're in Australia, 30 days. The UK is probably closer to 30. So how do they fund their business while they're waiting for this payment? It just, so they have to find that money somewhere. And so we help them fund their business at affordable rates that way. But ultimately what's going on as more money is being printed, and this is not just in construction, but that money needs to find a home, and more it wants to go to what we call good credit. So there's good credit and there's bad credit. Good credit are companies and people that you can easily lend to. So they're either wealthy or they have cash flow or they have assets. And so these are large companies. Large companies can borrow much easier. Small companies, small and medium businesses find it really difficult because if they don't have strong profitability or assets, then it's hard for them to borrow money. And so this is what's called the cost of credit spread. So there's a difference between what good credit can borrow for or lend on and what small businesses can borrow on. And that spread is growing still to this day and has been growing for 20 years. And it will continue to grow. And so that's effectively what Earlytrade does. It arbitrages this spread and allows both parties to meet in the middle. The good credit can pay early and get a little margin boost for it. And small and medium businesses can borrow at rates far more affordable than they can get from the financial services sector.
You definitely need to recommend to us a financial book on this to swim better.
Yeah. I'm trying to break it down as simply as possible.
Yeah, I suppose it's quite complex. I think the key thing that people should take away is like general contractor, subcontractor. If you want to improve your working capital and perhaps financial breadth, I'm not sure that's the right word, then use Earlytrade.
Yeah, having better cash flows, right?
Yeah,
that's
exactly.
Ultimately what it's all about.
Okay.
I just wanted to touch on onboarding. Like how difficult is to sell and to onboard to a customer? My gut feeling said that it's not that difficult, but over to you.
Yeah. So look, we sell to large general contractors, so they can be $1 billion plus. We sell to the CFO or someone in their team. So it's enterprise software sales. Sales cycles are 3 to 6 months, can be longer for larger customers. And so, with enterprise selling, you've got to, account manage the prospect. You've got to navigate all the different personas. You've got to find an exec sponsor. You've got to get buy-in, business case buy-in and stakeholder consensus. So there's a lot that goes on there. Once we sign a customer, we then have our customer success team onboard their suppliers and their subcontractors. And so we're very good at this. And this is what drives the subcontractors to get registered on the platform and start using it. And so that is a relationship building exercise, demoing them, getting them set up. And then after a while, the subcontractors become are familiar with the product and they use it on their own. We don't need to call them or talk to them. They'll just submit their bids when they're ready. Where the special sauce happens is where we start to sign the general contractor number 2, number 3, number 4, and those share the same subcontractors who are already on our platform. And then the subs can now request early payment across 4 or 5 general contractors, not just one. They've only needed to be onboarded once. And so instead of being able to pull 10% of their revenues in, they can now pull in 60, 70, 80% of their revenues. So the platform becomes more valuable over time as the network builds.
Okay. You also mentioned earlier that you see large growth from North America. I'm curious on your thoughts why there is growth coming from there.
Sure. Well, I'll answer that by starting you off in Australia, where we started our business, which is probably the most difficult market to start a business of this type in construction because there is regulated payment terms by legislation. So there's an act in Australia called the Securities and Payments Act, which mandate general contractors to approve invoices with a certain amount of time and pay within a certain amount of time. That's about 30 days. In North America and in the US, there's no regulation. It does typically differ by state, but the payment terms are much longer. We see payment terms of 90 days, but typically it's about 75 days or 60 days from end of month. And so there's just a lot larger time, a lot longer time, or a larger payment window that subs are waiting to request early payment. So the product performs better. And then the market is much bigger. There's probably 40 target clients in Australia that are of a good size. In the US, there's 1,500. So the TAM is much bigger there as well. But I would go a step further and actually say, now that I've sold in the US, UK, Australia, the US, UK, and Australia, the US is by far the most, has the most commercial acumen, willingness to drive innovation. If you can mitigate their risk and you can save them money, they'll give it a shot. Much more openness there than in the other markets so far.
Mm-hmm. Cheeky question. Why Earlytrade doesn't work for smaller contractors?
Well, our clients need to have strong balance sheets. So they need to have, so there's a trade here. It's called Earlytrade for a reason. To get the early payment, you need to have the cash. And so
nice.
The general contractor needs to be able to make early payment. And for our business, we need to be working with general contractors who are at a certain volume. But we do work with companies that are smaller, but you're typically either a payer or a requester. So you either want the cash flow or you want the margin. And the ones that want the margin already have the cash flow, and those are typically bigger companies.
God, what you mentioned earlier about the sales and onboarding and getting people selling to the CFO. What have you found has worked from you in terms of actually getting in front of these people in the first place? Like, how do you outreach? Like, maybe what's your go-to-market? If you could speak to that.
Look, this is one of the more difficult things, is getting your go-to-market right. You know, there's no one hack that's going to work here, but you've got to have good sales team doing outreach directly. You've got to have good marketing, which is, talking about your brand as well as driving top of funnel leads. You've got to have channel partners, so strategic partners who can assist with growth. You've got to be attending events and shows and conferences. You've got to have strong middle office revenue operations, aligning the customer success, the marketing, the launch, and the sales teams. But if I was to answer it in a sentence, you've got to have good people. And that's been one of the big learning curves for me, as this is my first business. But we've been going since 2018, is a lot of the learnings come from hiring the right people. That's
how many people have you got right now? How many people do you have, Guy?
We have 35 people currently.
What's the sort of spread between like product and technical development versus sales and perhaps operational work?
Yeah, I'd say it's about a third product and technical, a third operational, and a third sales and marketing.
Okay, interesting. What's your? How do you identify good people?
Look, it depends. It depends where the company's at in its life cycle. So if I was talking to someone who's just starting out, you've got to find people who have either worked in a startup before and know what that's like, or are willing to go on a journey where you might only have one or two customers and you're kind of, you're pre-10 people. It's a very different person to someone when you've got scale, you've got product market fit, and you're looking to achieve go-to-market fit. You need more experienced operators in your sector. people who understand what metrics to look at, can have difficult conversations, can manage people, and can get out there and grow. So it's different, but I would say the two traits that that successful people in our organization have is they've got initiative. So initiative is so important in a startup, thinking, what does the organization need? Can I solve that problem? And just getting on and doing it, as opposed to waiting for someone else to do it, or it's not in my job description, I can't do it. And then I would say grit, which is, it's persisting over long periods of time, and continually working at something over long periods of time, even if you're faced with rejection after rejection. Grit is so important. And I think those are two traits that are important for any entrepreneur as well.
Mm-hmm. I'm super curious about when you guys speak with CFO, what type of are these people? What's their knowledge of construction? Is it more financial conversation that you have with them, or there is a need of understanding of construction as well? And that perhaps a question also about who are people in your team? Are they finance professional or construction professional, or a mix of both?
In the go-to-market team, you mean?
Yes. Mm-hmm.
Yeah. So you've got to be able to speak the language of construction, or you won't be successful. And I love working in the construction industry because it's made up of people that just want to get shit done. There's less politics than a lot of other industries, like finance, for example. There's less ego. And these people build the society we live in. So when you meet a lot of them, like I do, you get an appreciation for the people that actually are building the things, the roads, the buildings, the bridges, the stadiums, the hospitals, everything, the data centers. So you 100% need to be able to speak in terms that they understand, or you won't be successful, because that's their world. There's obviously a financial conversation. We're a construction fintech, so there's a business case, but there's an education process to, like I'm talking with you guys about how it works. You had misconceptions that we might be invoice factoring. That exists with everyone. So you've got to educate them on how our product works. But there's always an aha moment where the light bulb drops and they just go, wow, okay, so I understand it now. And one of the challenges is talking to construction companies about paying their suppliers and subcontractors early. A lot of them are like, what? No,
you
we
crazy.
charge.
That's our business model.
Look, the general contractors are effectively risk managers. Okay.
Uh-huh.
They win the work, they coordinate the project, subcontractors deliver it, and they take a margin on top, which is a pretty small margin. And so they are incredibly good at managing risk. And the paying people who have done work for you is quite complicated in construction, because you've got to assess whether they've done the work correctly. The materials are there, it's safe. So all that stuff has to happen before an invoice is approved. And so that is typically why the payment terms are much longer. And our product is saying, that they are taking a slightly more risk by using their own balance sheet to pay early instead of waiting for the owner to pay them first. But in our company, you asked, do we have construction professionals? We do. We have construction. Our board has a lot of construction experience, people that have worked at tier one contractors, worked at the biggest developers in the world, understand the banking and financial side of it, which helps us navigate it. But most of our team is not from construction. So some of them are from construction technology companies, but Piers and I are not from construction. We have just built this product based on what the users tell us, and we've built it specifically for what the regulation says we need to do and what the compliance processes are for the payment processes in construction. And so we've built it based on what the market has told us.
Mm-hmm. Do you take the cut of the discount, or how is it structured?
That's
a
right.
Percentage, or
it's a rev share on the discount. So it's effectively free for our clients. They don't actually pay us. It comes out of the discount the supplier offers, and the supplier can access the platform for free. They can see, they can forecast when they're due to be paid, because they start to get more visibility. And then if they want early payment, they can choose to offer a discount. It's an option for them.
Yeah. I was going to ask also a question about how do you prevent people going behind your back, but looking at the number of customers, I don't think that's the problem really, right?
Because there's so much admin that would have to be associated with doing that, and trust, I guess.
Yeah, I mean, one of the things we compete against is because we sell to construction people, they think they can build everything, which is great. But they think they can do it themselves. And sometimes it's better to just let them work out on their own how difficult it is. But what we try and provide, so I mean, when you've got 100 subcontractors, you can do this on your own. But when you've got 1,000 subcontractors and 100 different projects, and you're spending $1.1 billion a year with them, it's impossible to administrate this. And there's a lot of risk associated with it. You know, how do you know there's not someone upping the discounts, or how do you actually get you need a technology platform, not only to communicate with them, but for them to price based on supply and demand. And to do that, you have to put a team of people on there. So you can do that. You can put 5 or 10 people contacting your subs and trying to work out a rate card to do that. Or you can go with Earlytrade. There's no cost in going with us. We only take a percentage of the savings we create. So you're not ever out of pocket. And let the technology platform communicate with the 1,000 subcontractors. Stick to what you do best, which is building things, you know. So that's kind of how we handle that objection.
I wanted to touch on the competition, as we talked about a little bit. Is there a competition out there, especially looking at your growth plan in the United States, and how do you differentiate from them?
Yeah, so I mean, there are a few different players doing dynamic discounting. The offerings vary. Some also provide supply chain finance. We've never done that. There's no one materially doing this in construction globally. We are the first mover. There are a lot of large construction technology players that are starting to build payment pillars as their strategy. And so there may potentially be more competition in the future. I think you have to assume that. But at this point in time, there's no one doing what we're doing in construction.
Very nice.
Beautiful.
Okay, Guy, I would be very curious to hear about your fundraising journey, because you are an investor from previous experience. So you wouldn't be going into this as like a new scrappy startup founder, like trying to speak to anyone and everyone to raise funds. And it sounds like, I'm maybe assuming here, but you managed to pick your investors quite well. So just curious about what the thinking was, how you approached the funding, and perhaps where you are now on the journey and any future plans. Wow, that's a big question.
Sure. So it's a funny one, because started the company in 2018, and the fundraising world was pretty crazy all the way up into 21. There was a lot of bubble type behavior in the market, but we did a seed round. It was taken by, family and friends in inverted commas, but mainly just private individuals. And I think we did that in 2018, 2017. Then we did our first Series A round of institutional capital in 2022, where we took investment from two venture capital firms. One was Outlook, their Global Elevate Series A fund, and the other was Fundamental, who I believe has been on your podcast, and they specialize in construction technology investing only. And so we raised that round after we decided that construction was the sector we wanted to vertically integrate into, and we wanted to expand globally. And so we raised that. And so we're in between Series A and Series B at the moment. We've been profitable 4 years out of the last 5. So we were growing a profitable business, but we are investing for the growth now. And so we're in a phase where, we've got to burn money to chase growth, which is quite ironic because a lot of people have been doing that or were doing that prior to 21, prior to interest rates coming down, and prior to investors really wanting profitability. We kept talking to prospective investors, and they were like, "It's great that you're profitable, but you need to grow more. You need to grow more." And so that's what we're doing. We're now focused on growth, but our margin profile is strong. You know, we're well into the 80s of gross profit margin, 80 percentile.
Is it 80 or 18?
80. Then the mid 80% gross profit margin. And so
I guess that's a large number, right?
It's in the top quartile for B2B SaaS businesses.
Mm-hmm.
Did you consider other sector specific investors? I'm curious as to how you came and why you settled on Fundamental.
And also, if you can add to this, like your thoughts after working with specialized investment partners and non-specialized investment partners.
Yeah, we chose people we like to work with who also had strong conviction on the space we were in and what we were doing. We chose Fundamental because they're in construction technology, and they've got a lot of pattern recognition there. Yeah, and then we worked with one particular partner because he had a very strong conviction on us. He'd worked for a very large, probably the largest venture capital company out there, and he had strong pattern recognition on other business models like this, and he could quickly identify what we were doing differently and benchmark that based off sort of similar space companies. And so he had a high conviction in what we were doing. And so that's why we chose to work with him. But as we scale and we get bigger, it's very important being aligned on, you know, what you're building, how you're going to go about growth, who you're working with, what the exit plan might be. That's becoming more and more important as we become a mature scale-up as well.
You mentioned earlier that you are now investing for growth within Earlytrade. What does it entail in your case?
Yeah, so expanding the go-to-market team, launching in new regions, investing in AI. We are looking at how AI can help our platform engage with subcontractors, negotiate rates, onboard people. So we follow a number of companies who are investing in customer support on the AI side. So that will be a big scaler in the years to come. It's expanding the footprint, and it's being okay with burning cash to do so. You know, and it's educating your investors on how you're doing it. And look, my job is pretty simple when you break it down. It's growth, making sure the company is growing at the right rate. It's cash flow, making sure we don't run out of cash and planning that. And it's people, trying to find, hire, and retain the people that, and that third one's the hardest. It's taking up more and more of my time.
You forgot number 4, keeping the wife happy.
That's it. Yeah. Well,
And kids.
I should have said that as number 1, but, my life is about balance. Like it's balancing. I typically find when the business is doing really well,
Yeah.
I've been home a little bit. The home's doing really well. The business is neglected. And then what I've got left of a social life, I have tried to maintain health and fitness because it actually affects everything really well. Like it allows me to concentrate. I'm in a better mood at home and at work. I've been doing trips internationally every 6 weeks for 2 weeks, 2 weeks every 6 weeks for about 2 years, managing jet lag. One of the ways I found that managing jet lag is the best is fasting, actually.
Oh, wow.
So you can fast. So if you're going into a new time zone and you're on the plane and you should be sleeping, fast through that time. Don't eat when you should be sleeping. And then when you get there, get a bit of sun, go for a walk or a run. But battling the jet lag is hard.
Yeah. It's quite funny. We were talking off air before we started recording and we were like very curious. I also have a friend and we talk, he lives in Australia and I'm like, he's like, he has to do meetings because his customers are in all sorts of parts of the world at just like crazy times. So I guess I feel for you Australian guys. And if there was anyone to listen to when it comes to jet lag hacks, it probably would be you.
Yeah. Also the Irish. I think there are more Irish people living outside of Ireland than there are.
Yeah. Very nice. I come from an Irish immigrant family, so I can vouch for that, living in the UK. I think what would be interesting to perhaps touch on is 2 more things on Earlytrade, and that would be any real challenges that you guys experienced and what you see as like potential hurdles of upcoming growth.
Look, going through COVID in Australia was probably the most challenging time for me personally. Australia took the lockdown laws very seriously, and we were shut in our houses 23 hours a day. And so trying to grow a business during that time was really tough. I'm fairly extroverted. I like to get out and meet people. And so that was probably, looking back, the biggest personal challenge. In terms of business challenge, it's, I've hired a lot of people who haven't worked out. And hiring people for the right stage of your company is really important. As you grow, you've got to be careful not to hire too many managers. Earlytrade's, a lot of us are operators. That's what we classify ourselves. And so for us, it's actually the inverse. It's starting to delegate and get the IP out of your head and get it into a team's head, train that team, hire someone to lead that team and move on to the next challenge. But hiring people who just don't work out it just sucks momentum. It slows down the flywheel because you've got to rehire. I've never had someone leave us who was doing really well, who was being really successful. And we've still got...
What are your lessons from these wrong hires? What have you learned?
Yeah, and is there anything you think in the hiring process you could have done differently maybe? Because I found this fascinating. It's very difficult to tell when you speak to someone for, I don't know what your process is, but maybe you have a few hours with them and then suddenly they're in your company for a few years and you realize, oh, this isn't quite what the impression I got.
Yeah, look, keep HR out of the hiring process as much as possible. The managers should be hiring. They're the ones who are responsible for, the people that they're hiring. And so they need to be accountable for them. You need to do heavy reference checks. And we reference check people sometimes without their permission. We just call up the companies on their CV and ask about them because we want to try and find an unadulterated view. But I think pretty much in the first 2-3 months if someone's going to work out or not. Holding on to people too long is, I think, a mistake every founder I've talked to has made, because when you have biases, and sometimes you see something in someone that reminds you of yourself, you think, okay, that person has potential. Watch that phrase, that person has potential, because B and C players, I've never seen a B or C player become an A player. I've never seen it. So it's really difficult though, when you start out, you can't afford A players. So you hire Bs and Cs, you try to drag them, and that's why you get very stressed, because you have to do a lot more work than you think you need to do. But we try and focus on just hiring A players now. So people that we know are going to be good. We've got a lot more bald heads and a lot more gray hair in the company now. So we've got people in their 50s. I don't know if we've got someone in their 60s. We've got so we originally had a lot of young people, and now we've got a good balance. So people with experience, and, all the stuff that matters is the stuff you can't teach, like the mindset, hunger, grit, having that drive, wanting to be successful, and a lot of people have done that. A lot of people have done that before and have had that, and then they've made some money, and they just don't have that anymore. We don't want people who want to be comfortable here. We want people who want to drive a lot. This is not a job. You don't work for Earlytrade because you want to be comfortable. You work there because you're excited by the work. You want to grow personally and professionally and financially. You don't work for us for the benefits. You work because you're on the mission.
Very good. Nice. I just wanted to steal one question on this. As you've been in finance for a long time, and now, not lending, but having business in construction, fintech. Yes. Then, what are your thoughts on the blockchain in this fintech in construction space? Because a few years back there was lots of potential ways of implementing blockchain into payments. And have you explored any of those?
Yeah, we have. We've built on an immutable database. We've built our progress claim payment application product on an immutable database. Look, I think it's just a bit early still in the blockchain life cycle for it to come directly into supply chain. I think there are a number of companies that are doing exciting things in the space. For us, our business model, we don't have payment rails. We don't process payments. So we don't have a desire to do so at this point. We've kind of removed that from our business model, which makes things a lot less frictional. But I think it's definitely going to come into the space. I mean, there's a few coins and cryptocurrencies that are building for this. So, I mean, you have Ethereum, you have Solana. They're both building networks where financial and consumer applications are being built on top of them. Then you have, so one of these players will probably become the leading financial blockchain at some point. But, it all depends on how many transactions you need. So Bitcoin, right? It's a fairly slow network, but it doesn't need to be because it's so secure. It's never been hacked. So you have very large sums of money being traded on Bitcoin, but Solana can process, 1 million transactions per second with Firedancer, their new protocol. And so that's going to be relevant to a lot of consumer applications and financial applications who need to process. So think about all the $4 transactions that are happening. If you're buying coffee or you're paying for a subscription service online, or from a financial side, you've got a derivatives trading product where lots of little purchases need to be made. You need crypto protocols that can process that much. And so it's still so early in the cycle. I mean, I think the adoption of crypto is 40% higher in its life cycle than the adoption of the internet in 97, 98. We're about at that stage in the crypto cycle, internet 97, 98. And by 2030, it's supposed to be 1 billion users. And then by 2040, 4 billion users. That's half the world's population. So I think we're very early in it. And in business, being too early is as good as being wrong.
Yes.
So we haven't incorporated it yet, but we do watch it.
Very nice.
Okay.
Okay. I think that's a cool way to wrap up. Guy, thank you so much for joining us. I really did enjoy this conversation. So could you tell us, our audience, where they could find out more about you and perhaps get in touch with Earlytrade if they're interested in hearing more?
Sure. Earlytrade.com. You can go to the website. You can learn more. You can contact us at the hello@earlytrade.com if you have a business inquiry or other. But it's been fun chatting, guys, and thanks for having me.
Thank you.
you,
Despite the fact that everyone left from the office so late.
Did you see that?
Yeah.
I noticed when we started, it was light and it's got dark now.
I think the cleaner's behind me somewhere.